Sorry folks, I've heard this way too much to not speak up about it. We're approaching kind of a critical junction here soon, and so we need to take just a moment to talk about interest rates. Boring topic, but with huge impacts. Spring is around the corner. Well, I mean, really, it's like here. And although it looks like the long-term future is bright, the current real estate market is only just starting to ramp up. Now, don't get me wrong, there are certainly some hot parts of the market right now where the market is just absolutely booming. In fact, I had an Instagram post that I put up there the other day. 6 of 9 homes that we were trying to schedule to go view with buyers had gone pending on us just over the matter of a couple of days. It was a little frustrating, to be honest. So the market is hot, but all the hype of the market, really taking off this spring like a rocket ship hasn't exactly come to fruition. And why is that? Well, according to most, insiders and people that track this and, professionals in the mortgage and real estate industry, what was supposed to happen was the rates were supposed to come down. And that's really where all the hype came from. Because there are still a large number of buyers and sellers that are just holding off and not making a move at all until rates come down. And ultimately, yes, the rates are still projected to come down. But the problem is that the interest rates are not going to come down the way that they went up. You see, most people, myself included, back in like December and January, saw the interest rates starting to do this and go down. I thought, oh boy, here we go. Spring's gonna be off the chain. And guess what? There was a little pocket of action, a bump in activity, if you will. And that's just kind of what we call it. Activity kind of ramped up. And we sold a lot of homes in December and in January, believe it or not. And this led many to believe that this spring market, that rates were going to continue this downward trend and this spring market was going to absolutely explode. But then something else happened. They stopped falling. And in fact, they actually ticked back upwards just a little bit, kind of in February. And to be honest, everyone kind of thought we were done seeing the rates tick upwards at all. Heck, even the optimist in me feels like we should be in the 5s. But we're not. I just looked this morning and currently right now we're looking at 6.88% interest rate for a 30-year fixed conventional conforming loan and 7.16 for a jumbo loan. Yikes. So let's take a second to break down this whole interest rate thing so we can be a little bit more informed and a little bit more educated leading into this spring and summer market, okay? So Jerome Powell, the Fed chair, and I'll try not to bore you too much with this, I'll just try to make it brief. But essentially, Jerome Powell, probably by the time you see this, it was about a month ago, said that the Fed is pleased with where we are at right now economically. They believe that we've done a good job at tempering the inflation over the last 2 years. They didn't overreact by raising rates too fast, and they believe that ultimately overall the economy is strong. So the Fed is not in any hurry to cut rates. Again, these are their words. Then of course last week we saw 2 more major economic factors come into play here. A, inflation is actually holding steady and sometimes increasing a little bit. It's going up and down but just a little bit. It's basically flatlined, which is not good. We need it to go down. And B, counterintuitively, unemployment has actually gone down, which is a good thing overall for the economy, yet for mortgage interest rates and for the Fed interest rate, it's a bad thing. We need unemployment to go up in order for them to consider cutting rates. So remember, good for the economy, but not so good for interest rates. So that is why interest rates have not come down. But they've also said that they're projecting 3 rate cuts this year, which a few months ago they were saying it was going to be somewhere between 4 and 6. Well, turns out these rate cuts aren't really coming anytime soon. The earliest that they are seeing this first cut even being possible would be like in June. And that number of 3 rate cuts in a year, who knows? As long as the economy is doing really strong and they're still battling bringing this inflation down, they might not do cuts at all. And so what does that mean for now? Do we just sit around and wait for these cuts before we consider buying a house? Time out. We're about to get to the good stuff here, but before we do, we just want to, ask you to subscribe and hit the little bell notification. Look, we cover all kinds of content here, from recreation to real estate, all things pertaining to moving to and or living in Bend, Oregon and the surrounding Central Oregon area. So if you are thinking of buying or selling here in the area, my team and I would love to be your agents of choice. All right, back to what to do next. One other thing that Jerome Powell said that I myself have been, kind of contemplating and pondering on for months and months now, is that he doesn't believe that the interest rates will ever come back down to where they were right before the pandemic. Now, before the pandemic, mortgage rates were not in the 2.5% to 3.5% range. No, those were post-pandemic or in the pandemic kind of emergency, economy's on fire, so much fear and doubt, right? That they were basically giving away money for free mortgage rates. No, before the pandemic, rates were in like the mid fours, which was already really good. Here, January 2019, 4.6%. So if Powell doesn't see rates coming back into the fours, the mid fours, maybe all we have to look forward to is the fives, mid fives, maybe the upper fives. And again, I've been saying this and thinking this, and I don't know that I've ever necessarily said it on this channel, but I know that I've said it to clients. We're never gonna see threes again. We just won't ever see interest rates in the threes again. I mean, it might be 30 years from now, but my mortgage will be paid off by then. It's just not gonna happen. So please, understand you're never gonna see threes again. And you're probably not gonna see fours for, I don't know, maybe 4 or 5 years from now, maybe? Interest rates generally and typically take the elevator up, but they take a very long, winding staircase down. It takes a long time for rates to come down. Interest rates are currently sitting at 6.88, like I already said, and in the grand scheme of things, that's not actually that far from where we will likely kind of settle out. Maybe the mid to upper fives. So, if you are considering a move, hopefully I've brought a little insight to you that you understand that it's probably not a good idea to wait for potentially years to see an interest rate in the fours again. So let's consider some alternatives. Everyone I talk to believes that as interest rates do come down, it's going to unlock this massive swell of buyers that are going to come out of the woodwork that have been pent up, over the last couple of years, and it's going to create an insane amount of demand. And yes, I share this belief. And what I've been saying is it really vastly depends on how quickly these rates come down. That'll also kind of determine how fast people come back into the market. But I'll also ask you this. Do you know that you can actually pay money up front to get a lower interest rate? It's called buying the rate down, and you can build this fee into your loan and turn a 6.8 interest rate into a 5.8 interest rate. And the best part is, depending on the specific home that you're writing on or kind of the market conditions, the micro market conditions that you're looking in, sometimes you can actually build it into your offer and have the seller pay for it as a concession. Now, that's a little bit technical, but it's something that we do all of the time. Another option is that some lenders are actually offering a free refinance. So a year down the road, when the interest rates do fall, you can refinance your loan and save yourself, quite a bit of cash on your monthly mortgage. Now, just as a quick disclaimer, nothing is ever really truly free, but it's still a really great option. So I guess my thought is you can either buy now and buy the rate down, or take part of a lender opportunity to get a free refinance, or some other creative financing that gets you into a house now and you can enjoy a beautiful Bend summer here. Or wait around for the second half of this year for maybe the interest rates to come down, or maybe wait further out if it takes longer for them to come down. And then you're gonna have to battle with all of the other buyers that are gonna be coming out of the woodworks, all to save this much on the interest rates coming down. I don't know if you remember 2021, but the multiple offer situation was a pain in the butt. It's not a perfect solution. I get that. But I think that the truth is that we're not far off from where interest rates are ultimately going to kind of level off anyway. So you might as well start now. I mean, historically speaking, an interest rate in the fives is amazing. Yeah, we were all certainly spoiled when we got interest rates in the threes before, but fives is fantastic. The key is finding the home. We are still seeing record low inventory. Things are trending in the right direction. They're getting a little bit better, but we're still historically low. So if you can find a home that suits your needs, do not be afraid to pull the trigger. And I'm not just saying that. Now is a really, really good time to, buy a home and potentially get in front of all this backlog of buyers that will be entering the market shortly. In fact, a conversation I had with a client the other day was actually kind of the inspiration for this video, and it went a little something like this. After not having really talked with him for almost a year, over a year now, we connected, and this particular client said that they were still waiting for the interest rates to come down. It's been over a year now. It's been 2 years now. I said, no. Let's just get you here. You could be waiting for 2 more years. Let's get you here. Let's get you into a home. Let's either pay to have your mortgage rate bought down lower on the front end so that it's that way forever, or let's talk about some sort of free refinance option or a 2-1 buy down, something like that. But let's get you here so that, we're not sitting around waiting for years and years and years for these interest rates to come down. Life is too short to be living it sitting around waiting for interest rates, especially when they don't have that far to come down anyway. And boom, my time is up. All right, so look, once again, thank you so much for watching. If you or someone you know is looking to buy or sell here in the area, my team and I would love to be your agents of choice. You can find us at KrommRealEstate.com, or if you dig down in the description of this video, we have our contact information down there below as well. Thanks so much for watching. If you want more information on the nerdy stuff, there's probably gonna be a playlist coming up over there, just about real estate in general, or we'll see you over in the suggested video that's coming up right over here. Cheers, we'll see you.